Hey everybody, it's John King, and this is my market update for Friday, the 7th of March. And no, it's not Friday anymore. It's Saturday afternoon. I had a crazy day yesterday and was not able to do my market update, but I am going to make sure it happens, even if I have to do it a day late. So I'm coming to you with a lot of information. We're going to go through a lot of things pretty quickly. If you have questions, feel free to post them into chat and we'll jump through that. But I want to start out first and foremost with what's going on kind of with the mortgage news and what's happening in the markets. And it is really jobs, inflation, and the Fed, oh my. And actually, to really lead that off, it actually is all about tariffs, because that's creating a huge amount of volatility right now. I have said it a million times, and I keep saying over and over again, I don't care what your political affiliation is. I don't care to tell you mine. I'm not going to have a political debate. We're just going to talk facts. The facts are right now that the economy is in flux, and tariffs are not helping, because companies don't know, individuals don't know what things are going to cost tomorrow. We thought inflation was bad. We were concerned about what inflation meant to the economy and where mortgage rates were going to go in the housing market. Well, now it's a whole lot worse, because now we're dealing with a significant amount of uncertainty. We're dealing with turmoil when it comes to, hey, are we doing tariffs or are we not? So our president on Tuesday night had his speech in front of Congress and talked about early April that we're going to have reciprocal tariffs. There's a lot of uncertainty there on what that's going to mean to the economy. Theoretically, in the long term, tariffs have the ability to improve our economy and to bring inflation down. In the short term, there's going to be a lot of volatility, and the president made it pretty clear that we're going to be dealing with challenges in the short term. Whether you like his policy or don't like his policy, the truth is I don't care. What I want to share is we're in for a rough ride. We're in for volatility, and that's what we're dealing with right now. Jobs is critical. Jobs has been the most critical piece of this of our markets over the last few months. Before that, it was all about inflation. Now it's become more about jobs. Inflation matters, but jobs is really going to drive the inflation piece. We had a jobs report yesterday. It showed fewer jobs than anticipated. So we were expecting 161,000 jobs. We got expecting 160. We got 151. Not that much off, but it was a decrease, and the unemployment rate went up. So that's something that's to be concerning for the economy. Bad news for the economy is good news for mortgage rates. And if mortgage rates come down, that's going to drive house prices up. So it's a really weird combination of what we're dealing with. But here's the truth. What I'm more worried about is the fact that people are paralyzed right now. What I'm hearing in the marketplace is people have uncertainty about what's going to happen, and it's gotten a little bit worse. Now, I'm also hearing about a lot of people who are super excited about taking advantage of the market this year that are just tired of sitting on the sidelines. And the good news is interest rates on mortgages have come down. So we're seeing interest rates falling. So let's talk a little bit about what that looks like. What you're looking at right here is the Fannie Mae primary market survey. So it is a weekly survey, primary mortgage market survey. It's a weekly survey that comes out every single Thursday, but it's based on data that was collected on Monday. So you be super careful about this. It gives you a good idea week over week of where things are at. It doesn't tell you today. Like if you look at this, it's really outdated because it's 3 days old by the time that it is actually released. But what you're seeing is the average 30-year fixed is 6.63. Now that's average. So there's lots of reasons why it could be higher or lower, but the average 30-year fix is 6.63. And if you look over the last year, the lowest we saw was 6.08. The highest we saw was 7.22. So we're seeing rates down about the halfway point between where they were at the high point over the last year and at the low point of the last year. And we really saw our low point here in September. That's where interest rates were absolutely at their lowest if we go back for the last 12 months. So we've seen a high amount of volatility with rates as high as 7.22, dropping all the way down to 6.08. Now, during these days, I was locking some people in as low as 5.25. I still had some people that were locking at 7. So you got to be careful about average interest rates. And typically, FHA and VA loans are lower rates than conventional loans. So that skews the averages as well. But what you're also seeing here is we saw rates come way back up. And this is because the economic news. Once the Fed started lowering rates, which everybody thought meant that mortgage rates were going to keep going down, didn't happen. And now we saw a lot of the economic news saying, hey, maybe things aren't as bad as what the Fed thought. And the Fed's come around and agreed and said, hey, We put a timeout on lowering interest rates, and they're maintaining that timeout. So they're basically saying, hey, we are going to have a pause on lowering interest rates. The Fed is meeting in a week and a half. So March 18th and 19th, nobody expects rates to drop at all. But remember, the Fed doesn't control mortgage rates, because we saw mortgage rates dropping all throughout 2024, early 2024. We saw it hit the peak here in May, and then they dropped in June and July and August and September. And it wasn't until September that the Fed started lowering rates. So the Fed does not control mortgage rates. Get that out of your mind. But the direction the Fed is going is what the mortgage industry is trying to predict. That's the key. We think that now rates have been coming down. There's lots of reasons. A lot of it has to do with the volatility we're seeing in the market, specifically coming from Washington, D.C. And that volatility is pulling money out of the stock market, and bad news for the stock market is typically good news for mortgages. But will it last? I mean, really, we saw interest rates drop. And again, we're right around here, pretty similar to where we were back in August. And yeah, we saw rates keep dropping, but then they turned around and went back up. So the question is, are they going to last? That is the unknown, and that's the biggest thing that we need to be aware of. And so I want to really shift my focus really quickly and talk about people are talking to me about refinancing right now. A lot of people are calling me up and saying, John, I want to talk about refinancing. I think it's time to refi. You got to be careful. Like, there's a lot of good reasons to refinance. There's a lot of bad reasons to refinance. That's why I created a channel called canirefi.com. You're going to see the QR code right above. Well, there's a website that I have, canirefi.com. That's the easiest way. Go to that website or scan this QR code, and then you'll be able to subscribe to my YouTube channel. I'll be having calculators on that website, because here's the deal. You don't want to refinance too early, because you're going to pay fees when you refi. And I had a client call me last week and say, hey, John, I saw these interest rates are dropping, and I want to get this rate with no fees. That's not how it works. The rate that you see is based on you paying all of the fees all over again, like you paid when you bought the house. There are ways to get a low or no fee loan, but it comes by paying a higher interest rate than what the market is offering today. So that bank, that lender, that investor on Wall Street is saying, I am willing to accept a higher interest rate than what I was planning on accepting in exchange for paying some or all of your fees. So they're writing a check up front to pay for your loan fees in exchange for collecting more in interest than what they would normally getting on a new loan today. That's the theory of a free refinance. But there's no such thing as a free lunch. You don't get market interest rates and a free refinance, because banks are only paid in two ways, either fees up front or money over the life of the loan. And if they're making regular expected interest, they're not making extra money over the life of the loan. They're not going to pay for your fees to do your loan. So you need to be very, very aware of that fact when you are thinking about your options and you're thinking about refinancing. Don't just jump because you see interest rates drop a little bit. Reach out to me, allow me to talk to you through it and help you decide. Subscribe to this channel so that I can help guide you and tell you when it's a good time. I'll have calculators there for you as I build it out as well. All right. The other thing I want to cover before I go, where am I going here? I'm going to Dream for All. So if you were on my Dream for All, I did a live stream earlier today, only to my Dream for All channels, but we are, that program is coming to an end. Everything that I'm seeing and hearing and feeling says a lot more vouchers were issued, but that program is starting to wind down. So if you are on the wait list, I would be thinking about alternative options. I'm not telling you there aren't going to be any more vouchers issued, but I feel like we're getting much, much closer to the end than I thought we were. And so you just need to be prepared for that fact. Aside from that, guys, really, I want to answer any questions. I know this is not a normal time for me to be doing a live stream, so I don't have that many of you watching right now, but I know a lot of you are going to catch it afterwards. So if you're watching right now and you have questions, please feel free to post those questions into chat. If you're watching recorded, then go ahead and post those questions later. Otherwise, gang, I just really appreciate it. If you have any questions for me and you want to schedule time to talk with me, you can scan that QR code as well, and we can schedule time to talk about anything mortgage related. I am for sure interviewing to be your lender. So if you have questions about purchasing, you have questions about refinancing, you want questions about construction loans or renovating your home, if you're an investor thinking about buying investment properties, I have a channel dedicated to that as well. I've been talking about it periodically. I'm not going to necessarily push that today, but if you go to any of my YouTube channels on the home screen, you will see a link to all of my other channels that I'm building out. Again, I really appreciate you listening. Please tell a friend. Look forward to the opportunity to take care of you and anyone that you trust to refer to me in the future. Have a wonderful rest of your weekend. We'll talk to y'all soon. Bye-bye.